Good morning. My name is Patricia Stallworth, and today's topic is the 1040, a bird's eye view of your money story. On the surface, the 1040 looks very much like just a form that the IRS has you to use to fill out your annual tax returns. But it's really a lot more than that. In fact, it is an analytical tool. And in most cases, I think that in most cases, advisors will ask new clients to give them their past 3 to 5 years of tax returns. And in many cases, it's not really viewed as an analytical tool. It's just to check some information, such as investments and things like that. But it is really much more than that. In fact, it reveals your priorities, your spending, your saving, and your investing habits. What we're going to do today is just do a quick overview of how to use the 1040 as an analytical tool. And for this, I'm going to be using the 2017 income tax return. In 2018, taxes had a major overhaul and the forms changed dramatically. And so it's much easier to see it on the 2017 and earlier tax forms than it is on the 2018. We will, however, cover the 2018 form in the next module. Now, the 1040 is really a summary document, and it's backed up by a series of schedules where the details or information you may find will be on various schedules. Some common schedules, I've listed some common schedules here, and these are, for example, Schedule A, which is for itemized deductions. When you're filing your tax return, you have the ability to either use itemized deductions or the standard deduction that the government provides. You would want to use the itemized deduction if you think that your number is going to be higher than the standard deduction, so that you get a bigger adjustment to your income. Schedule B is for interest and dividends, and Schedule B is only required when you have interest and or dividends that are greater than $1,500. Schedule C is for self-employment income. This is where you have, you're either a sole proprietor or a single member LLC. Any other business structures will be required to file different schedules or forms. Schedule D is to report income and losses on the sale of capital assets. We most often think of this as stock, but it could also be a car or home that you have sold during the year. Schedule E is used to report income and losses on rental property, and this is also where you will have your partnership, your S corps, and any trust or estate income. Now let's jump right into the 1040, starting with the filing status. Now the filing status is pretty straightforward. It's just going to tell you if the person is married, single, information like that. The only thing that really kind of jumps out here is if you see someone who was married filing separately. When you see this box, you need to ask a question, because it's generally not financially advantageous for couples to file this way. In fact, they, in most cases, end up paying more taxes. So the question is, why is this happening? The next one, the exemptions, will just give you an idea of who in the family is a dependent. For example, this could be children. It could also be parents. It could be grandkids. It could be a girlfriend-boyfriend situation where one is taking care of the other, and their children as well in some cases. So this will give you an idea of what the family picture looks like. Now let's jump to some juicy bits of where the money is coming from. Obviously, salaries, wages, salaries, and tips is fairly straightforward. Taxable interest is going to be this is going to give you an indication that that person has some savings or something that is kicking off some interest. So this, if it's more than $1,500, you're going to see that Schedule B as well. Tax exempt interest is municipal bonds or something along those categories that is not taxable at the federal level. And if you look at the form, you can see that line 8B does not carry over into the final column. So that is an indication that this is not taxable income at the federal level. Ordinary dividends, same thing. They have some type of stock, something that's kicking off some dividends. And alimony received. Alimony received up until any divorces that were final before this year, alimony received is taxable income. Taxable income that can be used for IRAs and things like that. However, as of January of this year, any divorces that were finalized will not, alimony will not be taxable to the person who receives it or income to the person who pays it. Business income, this is your Schedule C that we talked about earlier for a sole proprietor or for someone who has a single member LLC. And I put a red box over in the final column here, and that red box just indicates that the number that you see here, the amount that you see here, is not necessarily an indication of how successful that business is. And that means that in this case, you would probably need to go and look at the Schedule C if you wanted to get a better idea of what's going on. Business owners have this aversion, if you will, to paying taxes, and so they will look for every possible deduction. So it could be that the business is doing very well, but they have found a number of deductions that they can take, so that this number gets very small in terms of paying taxes. And the same thing goes when we get down to number 17 there, which talks about S corps and partnerships. In terms of capital gain and losses, we mentioned that on Schedule D. That's for the sale of any kind of asset that might have occurred during the year. IRA distributions. This could be an indication that someone is running out of money during the year and needs to take it out of their IRA, or it could be someone who is retired and is just taking out money from their IRA. Pensions and annuities, that's going to give you an idea of, even if people are being able to retire a lot younger these days, especially from the military. So you may see someone with a pension as well as wages and salary. So that gives you some idea that they have some backup income as well, or it could be a retired person. And Social Security benefits. When you start to look at Social Security benefits, if you do not see a taxable amount, that means that they're not making a lot of money, which you will have seen earlier on this particular slide. So now, we've seen where the money is coming from. Let's see where some of it's going. And in this case, the things that we're looking at of where it's going are actually examples of adjustments to your income that are tax deductible, So educator expenses, if someone is a teacher, then you're going to see that they do have the ability to deduct some of the expenses that they've used to get their classroom together, etc. Health savings account, or HSA. This indicates that that person is really interested in their health and they understand that they need to save for that. So this is a special account that they can deduct what they have put into that account. If you see a SEP or an IRA, a SEP or a simple or other qualified plan from a business owner, this means that they're planning for retirement. If you don't see anything here and they are a business owner, then this is an opportunity that they may be missing out on. Alimony paid. As I mentioned before, for those people who are who have their divorce decree before the beginning of this year, will also be able to deduct alimony that they pay, and so therefore it is taxed. Since it's taxable to the person who received it, it will be a deduction to the person who actually paid it. And then if you see student loan interest, then somebody in the family is or has been a student and they're deducting that interest. And here again, this takes us to the bottom line, which is your adjusted gross income. And this is what so much of your tax is based on. So remember, I mentioned earlier that there was a Schedule A, and that Schedule A was going to be used to Schedule A either for the standard deduction or for your itemized deductions. So if you wanted to use itemized deductions, that would be coming here on line 40 is where that would go. And then your total tax would be calculated. So once the tax is calculated, if you're eligible for various credits, then those could be deducted at this point. So that could, credits are deducted from your total tax, which makes them very, very popular to use credits. We're not going to cover the credits in this particular module. We'll cover them in a future module. So bottom line here is we get, after we subtract your credits, then we have the total tax that you owe. But that's not really the end of the story, because there's a possibility that you owe other taxes, and those taxes will be added back in. For example, if you're self-employed, then you may have to pay self-employment tax. That would be added in. If you've taken money out of your IRA, then you may have penalties, and those would be added in on line 59. And finally, when we get to line 63, we have your total tax. And so that's the amount of tax you pay. And then we get to what I call the dueling arrows, because if they're on line 64, it's the how much money you've actually paid in to the system. And so if there is a big difference between line 63 and line 64, or how much you owe versus how much you've put in, the question is why. If you have put in more than what you owe, then that means that you're going to get a large refund, and that means that signals sort of missed opportunities, but it also could get at some mindset issues that may need to be dealt with. By the same token, if you owe a lot more than you've put in, here again, it may be that you have, number one, just decided that you miscalculated somewhere along the way. You are maybe putting money in investments or something else, or maybe that you just hate to pay taxes and you're holding out as long as possible. But if there is a large difference here, then you need to really get at what the root cause is, because there could be missed opportunities that you could take advantage of. And there you have it. So what have we learned here? We've learned that the 1040 is a great analytical tool. It provides you with a bird's eye view of your money story, your priorities, your spending, your saving, and your investing habits. I will now open it up to questions, and you can put those in the chat. And thank you so much. This is Patricia Stallworth with a bird's eye view of your money story, the 1040.